Hello and welcome to Compliance Briefs on client due diligence with an emphasis on source of funds and source of wealth. This compliance brief introduces the concepts of source of funds and source of wealth in client due diligence. It explains the key differences between them and why both are critical in assessing clients. The session also covers the main legal and regulatory requirements that guide compliance in this area. Source of funds is explored first, what it means, how it is generated, and the steps used to verify it. Then, source of wealth is explained, focusing on how overall wealth is built and assessed. The importance of documenting both is highlighted, showing how it supports compliance, risk management, and the prevention of financial crime. Finally, the presentation points out common red flags to watch for, and outlines the compliance responses when concerns are identified. Understanding where customers have obtained the money used to carry out transactions and make investments is an important part of the Know Your Customer (KYC) and the overall client due diligence (CDD) process and integral to AML/CFT compliance. As money launderers use increasingly sophisticated methodologies to conceal the source of illegal money, firms must work harder than ever to establish the source of funds and wealth. The source of funds and the source of wealth are relevant to determining a client's risk profile. Under the risk-based approach, obliged entities should satisfy themselves that adequate information is available to assess a client's source of funds and source of wealth as legitimate with a degree of certainty that is proportionate to the risk profile of the client. In order to scrutinize source of funds and source of wealth, it is important to understand the distinction between the terms. Source of funds refers to the funds or assets being used to fund the specific transaction at hand, including amounts invested, deposited or remitted, while source of wealth refers to the origin of a client's entire body of wealth, the client total assets. A key question we should ask regarding source of funds is how and where did the client get the money for this transaction or business relationship? The respective question we should ask regarding source of wealth is why and how does the client have the assets they hold and how did they accumulate them? Establishing the source of wealth and source of funds is a legal requirement and is covered both by national legislation as well by ICPAC's AML/CFT directive. Under Article 61(1)(d) of the AML/CFT law, source of funds forms part of the customer due diligence procedures based on a risk-based approach. Nonetheless, there are specific circumstances that mandate the establishment and corroboration of source of funds, source of wealth, as stipulated in Article 64, such as business relationships with PEPs and high-risk third countries. Furthermore, Section 5.7 of ICPAC's AML/CFT directive identifies the establishment of source of fund and source of wealth as an enhanced due diligence measure specifically for the politically exposed persons and in general to clients according to their assessed area and level of risk. Source of funds refers to the origin of the particular funds or assets involved in a transaction, business relationship, or account activity. It focuses on where and how the specific money being used in a transaction comes from. It is a snapshot that explains how the money used in a transaction was generated or acquired. More specifically, examples of the activities cover salary or wages, which covers funds derived from employment or freelance work, typically documented with payslips, employment contracts, and bank statements showing regular salary deposits. The proceeds from the sale of assets like property, vehicles, or investments. Documentation for the sale of assets could include sales agreements, transfer deeds, or transaction receipts. Funds received as inheritance or gifts, often supported by legal documents such as wills or gift declarations. Trade or business income, which includes earnings from a business and/or distribution of dividends. This type of income is supported by financial statements, tax returns, and bank records. Loans or credit facilities, which includes money obtained through borrowing, evidenced by loan agreements and repayment schedules. Funds are usually transferred through bank accounts or related or third-party transfers. Source of funds is typically assessed during individual transactions, such as large deposits or at the commencement of a business relationship, to ensure that the funds involved are not linked to illicit activities. It must be highlighted that the source is not restricted to the specific bank or financial institution the funds have been received. Establishing the source of funds should not simply be an exercise of identifying the bank or financial institution the funds may have been received. The information obtained should be substantive, relevant, and be able to establish the fund's origin and the method and circumstances under which the funds were acquired. The obliged entity needs to be alerted to any possibility that the funds may not be from a legitimate source or are not destined for a legitimate purpose. For example, when funds are sourced from a high-risk third country with inadequate AML/CFT legislation and regime, it is probably appropriate to obtain more information before proceeding with the business relationship or any transactions. In summary, to establish the source of funds, the following steps and documentation are typically required. Step 1. Identify the transaction type. Understand the nature of the transaction, whether it's a deposit, withdrawal, transfer, or investment. Step 2. Collect supporting documents. Documents should be collected in relation to the sources of funds depending on the case, as previously mentioned. Step 3. Scrutinize and verify the legitimacy of funds. Documents should be cross-referenced to third-party databases or conduct independent checks to ensure the sources are legitimate. Step 4. Assess for consistency by ensuring the source of funds aligns with the customer's known profile and typical financial behavior. Step 5. Firms should document every step of the source of funds process in order to inform subsequent supervisory reviews or law enforcement investigations. Source of wealth refers to the origin of an individual's or entity's overall wealth, that is, how they acquired their total wealth over time, and it involves understanding the background, activities, and circumstances that contributed to the individual's or entity's wealth. The source of wealth describes the activities that have generated the total wealth of a client, that may change over time. For example, business ownership and profits, wealth accrued through owning and running a successful business, supported by company financials, ownership documents, and audited accounts. Investments, wealth generated from long-term investments in real estate, stocks, bonds, or other financial instruments, supported by investment account statements, property deeds, or dividend records. Inheritance, wealth passed down from family members, supported by probate documents, wills, or estate distribution agreements. High-earning employment, accumulated wealth through high salaries or bonuses from executive or specialist roles, backed by employment contracts, tax returns, and bank statements. Lottery or gambling winnings, wealth acquired through gambling or lotteries, supported by winning certificates and relevant financial statements. Source of wealth is more comprehensive than source of funds, focusing on the entire picture of a person's or organization's financial situation. The purpose of obtaining source of wealth information is not to account for, or verify, the exact value of the customer's overall wealth, but rather for the firm to assess the customer's wealth-generating activities and, where relevant, those of any material beneficial owners, for example, where the account holder is a personal investment vehicle. The information that should be obtained should give an indication as to the volume of wealth the client would reasonably be expected to have and provide a picture of how it was acquired. Although obliged entities may not have specific information or details about all the client's assets, it may be possible to gather general information from commercial databases or other open sources. Source of wealth helps obliged entities assess the legitimacy of a customer's overall wealth and whether it aligns with their known economic profile and declared origin of their assets. Understanding the source of wealth is crucial for enhanced due diligence measures, especially when dealing with PEPs and other high-risk customers such as or those involved in complex business structures, to ensure that the wealth is not derived from illicit activities. To establish the source of wealth, the following steps and documentation are typically required. Step 1. Obtain information on wealth. Indication of client's wealth should initially be obtained through representations obtained from the client. It is not an absolute requirement to obtain the exact amount and might even be impractical to do so. Step 2. Obtain information on the source of the wealth. Once information on the client's wealth is collected, information should be obtained on where it came from, as it is not usually derived from one single source. Firms should try and obtain specific information as far as possible on how much wealth the client has or controls, and may use both publicly available information or declarations made by the client. However, it may not be possible to do so on every aspect of the client's entire body of assets, especially when this information is not voluntarily disclosed, but should cover those aspects that form the major part of the wealth. Obliged entities should bear in mind that failure by a client to voluntarily disclose information about how much wealth he or she controls could be a red flag. Step 3. Verify the information on a risk-sensitive basis. Once the firm has information on how client's wealth was generated and a description of it, it should consider the validity of this information. Depending on the level of risk posed by the client, the firm should seek to find corroborative evidence from a reliable, independent source that explains how the wealth was generated and focus on the sources that generated the major proportion of the wealth. Documenting the source of funds and source of wealth of a customer enables obliged entities to understand the customer's background and financial history, understand how and where capital was generated, identify if a customer's transactional activity is in line with what would reasonably be expected based on the information recorded about the customer, assess if activity and transactions are potentially suspicious. Documenting source of funds and source of wealth is critical for several reasons. Regulatory compliance helps obliged entities comply with AML/CTF regulations and supervisory expectations. Risk mitigation reduces the risk of inadvertently facilitating money laundering, fraud, or terrorism financing. Reputation management protects the obliged entity's reputation by demonstrating a commitment to compliance and ethical business practices. Enhanced customer understanding provides a deeper understanding of the customer's financial profile and potential risks. Prevention of financial crime helps identify and prevent potential financial crimes by monitoring suspicious transactions and profiling customers. Red flags related to the source of funds often indicate potential money laundering, fraud, terrorist financing, or other illicit financial activities. Obliged entities, businesses, and regulators use these red flags to identify suspicious transactions and to conduct further investigations if necessary. Common red flags associated with source of funds include unusual large deposits that are not in line with the client's known financial behavior, unexplained or inconsistent source of funds that are in line with the customer's known business activities or financial profile. The source of funds is inconsistent with the customer's stated business, occupation, or financial situation. Lack of documentation and insufficient justification and explanation provided to substantiate the source of funds. Reluctance or refusal to provide documentation or information that supports the legitimacy of the funds is also a red flag. Purchase of high-value assets without clear justification. This covers both luxury goods, for example, cars, yachts, art, without a reasonable explanation or documentation, as well as property or other high-value assets with cash or through complex financing arrangements. Negative media, publications that may indicate that the origin of funds may be linked to illicit activities. Red flags related to the source of wealth refer to potential indicators of suspicious activities involving the origin or legitimacy of a customer's accumulated wealth. Identifying these red flags helps obliged entities comply with anti-money laundering regulations and prevent the laundering of illicit funds or other financial crimes. Potential red flags indicating suspicious source of wealth include inconsistency with profile, wealth that does not align with the client's known occupation, industry, or socio-economic background. Conflicting information, inconsistencies between provided documents and information sourced from third-party verification. Vague or unclear explanation of wealth. Customers provide vague, incomplete, or inconsistent information about how their wealth was accumulated, or information that does not align with the customer's known background, business, profession, or industry. A sudden or unexplained increase in wealth without a clear explanation or supporting documentation. reluctance or refusal to provide documentation information or evidence to substantiate the source of wealth, including delays or attempts to avoid answering questions related to their wealth or financial background. Involvement of politically exposed persons. If the customer or beneficial owner is a politically exposed person or is closely associated with one, could indicate a higher risk of corruption or bribery. For example, wealth is derived from government contracts, projects, or industries which is susceptible to corruption, for example, defense, mining, public procurement. Unsubstantiated claims of inheritance or gifts. Claims of large inheritances or significant gifts without valid documentation, such as wills, legal agreements, or confirmation from third parties. Frequent references to unverifiable sources, such as family wealth or private investments. Rapid wealth accumulation in high-risk sectors. Rapid or exponential accumulation of wealth in high-risk sectors, such as cryptocurrency trading, online gambling, or private equity, without a reasonable business rationale. If there are concerns about a customer's source of funds or source of wealth, obliged entities must be ready to take the necessary compliance steps to address the potential compliance risk. Depending on regulatory requirements, compliance responses may include a decision to freeze a customer transaction, a decision to discontinue the onboarding of a client or to terminate the existing business relationship, enhanced monitoring of a customer's transactions, oversight from senior management employees. Finally, note that where scrutiny of a customer's source of funds or source of wealth reveals suspicious activity, the obliged entity should submit a suspicious activity report, SAR, to the relevant competent authorities, MOCAs, or the law enforcement authorities. For further details on source of funds and source of wealth, please refer to ICPAC's guidance on establishing the source of wealth and the source of funds, available under the Monitoring and Compliance tab in the Compliance Guide section. Part 7 of Compliance Briefs on Client Due Diligence will cover the economic profile. I hope you found this useful. For any queries, you may contact us at compliance@icpac.org.cy. Thank you and goodbye.